Hey everyone, welcome back to Economics Binoculars, where we make economics less boring and more useful. Today, we're talking about our friendly neighbor to the north, Canada. You know Canada, land of maple syrup, polite people, and free healthcare. But beneath that beautiful scenery, enthusiasm on hockey and Tim Hortons coffee lies a major problem. Canada's economy is in serious trouble. What's going on? Is it really collapsing? Or is it just having a polite recession? In this video, you will know. Number 1, how Canada's economy works. Number 2, the US connection. Why Canada's economy depends so much on the US. Number 3, the current crisis. What's causing Canada's economy to crumble? Without further ado, let's get started. Alright, first things first. Canada is huge. It's the second largest country in the world by land area. Yet, it only has 40 million people. That's fewer people than California. Canada's GDP is around $2.2 trillion. GDP growth rate, 1.3% in 2024. GDP per capita, $53,834. Despite its size, Canada's economy is not as diversified as you might think. Here's how it works. Natural resources rule. Canada is rich in oil, gas, timber, and minerals. In fact, it has the third largest oil reserves in the world. So when oil prices are high, Canada does great. When they crash, well, not so great. Manufacturing and exports. Canada produces a lot of cars, aircraft, and machinery. But here's the kicker. Most of these products go straight to the US. Housing boom. Real estate has been one of Canada's biggest economic drivers for years. Home prices skyrocketed, making cities like Vancouver and Toronto some of the most expensive places to live in the world. GDP and trade. Although Canada's GDP is around $2.2 trillion, ranking it in the top 10 global economies. But guess what? Roughly 75% of Canada's exports go to one country, the United States. We will talk more on this later. In short, Canada's economy looks strong on paper, but it's heavily reliant on just a few key industries, which is never a good thing when the world economy starts slowing down. If Canada's economy had a best friend, or maybe an overprotective older sibling, it would be the United States. Why? Because Canada's economy depends almost entirely on the US. Think about it. 75% of Canadian exports go to the US. The US is Canada's biggest trading partner by a huge margin. If America sneezes, Canada catches a cold. Let's look at some examples. Auto industry. A lot of the cars made in Canada are actually just parts of a bigger supply chain with US automakers. In fact, 93% of vehicles made in Canada were exported to the United States in 2023. If demand for cars drops in the US, Canada's auto industry feels it instantly. Oil and gas. Canada exports billions of dollars worth of oil to the US. But when the US boosts domestic production, Canada's oil industry struggles. Yep, I'm talking about Trump campaign slogan, drill, baby, drill. Interest rates. The Bank of Canada usually follows the US Federal Reserve when it comes to interest rate policies. This is the interest rates chart of Canada and the US in the past 25 years. I mean, can it be more obvious? But why? Because if rates between the two countries are too different, investors will move their money where they can get a better return, typically into the US. This capital outflow weakens the Canadian dollar, making imports more expensive and increasing inflation. But it's not just about interest rates. Canada's economic health is deeply tied to the US, not just in trade, but in financial markets, investments, and even consumer sentiment. If the US economy slows down, Canada feels the impact almost immediately. And if the US starts a trade war or raises tariffs, Canada isn't just caught in the crossfire. It's often the first target. Now, let's talk about why Canada's economy is on shaky ground. 1. Trudeau's spending and debt crisis. Prime Minister Justin Trudeau has been spending big. Social programs, green energy projects, pandemic relief. Sounds good, right? Well, Canada's national debt is now over 1.2 trillion Canadian dollars and rising fast. The government is borrowing heavily, and that's making investors nervous. Debt to GDP ratio is sitting on all-time high as 108%. In my previous video, we talked about US debt to GDP ratio as high as 120%. Remember, any country has a debt is bigger than its economy. It's a red flag. Number 2, housing market bubble. Canadian home prices exploded over the past decade, but now they're starting to crash due to rising interest rates. Mortgage payments are becoming unaffordable, and people who took on massive loans are struggling. Could Canada have a housing crisis like the US in 2008? It's possible. 3. Incoming tariffs and trade war with the US. And here's the big one. The US is ramping up trade pressure. With the dawn of Trump 2.0, higher tariffs on Canadian goods, especially in key industries like lumber, dairy, and auto manufacturing, have been in place since February 2025. The impact: Canada stands to lose billions in exports in the foreseeable future, putting even more strain on an already struggling economy. In summary, Canada is facing a perfect storm: too much debt, a struggling housing market, a slowing global economy, a trade war with its biggest customer, the US. That's why some economists are warning that Canada's economy is heading for serious trouble. Do you believe Canada's economy is actually collapsing, or is this just a temporary downturn? How much do you think Canada should rely on the US? Should it diversify its trade? Do you think this trade war will send Canada's economy into a recession? Drop your thoughts in the comments. So, is Canada doomed? Not necessarily. But if you found this video helpful, don't forget to like, share, and subscribe. Thanks for watching, and I'll see you in the next one.